Let's turn to the technicals now. The chart master has not one, not two, but seven charts that show a pullback could be coming. Cornerstone Macro's Carter Worth is over at the Plaza with all seven of those charts. Carter.
All right, let's look. So let's talk about what could be what we just heard, a pullback, a dip, a sell-off of some kind. Look at the sequencing. You can see it optically clear, a series of higher lows and higher highs, but the sequencing calls for what would be a dip of some kind. So let's try to figure it out together. Take a look at the annotations here. This is a powerful move, and then we actually broke trend here a bit. This was a powerful move, and we broke trend. This was a powerful move, and we broke trend, and we have just started to break below this line. Now, the percentages are quite similar in terms of the advances and the declines. Take a look at the next slide. So, again, a big move. This is about an 8% sell-off. Another big move, an 8%. This was a big move and a 6%. What we might expect is something 4 to 5 or perhaps more. We just heard that maybe 7, what Joe was looking for. But the point is that the sequencing calls for not a higher here, but some form of give back, some answer to this overbought circumstance. So is it 4? Is it 7? Is it 10? Or is it the beginning of something much worse? But either way, betting for just higher and higher every day is not the bet that I would want to make.
Do you also like small caps, Carter? What do you see in the chart for them?
The bet on small caps, of course, is a bet on financials, right? The weighting in the Russell 2000 is almost double in banks and financials as it is in the S&P. So to some extent, and other cyclicals, it's making a big bet that this move in interest rates persists and that small and regional banks do well.
Okay. Carter, we're going to leave it there. Thank you.
Wait a second. He's not coming. No Carter Worth?
No.
Wow.
Is it the butcher story?
Is that
why?
It's my fault.
I mean, that whole number thing took so long. We don't have enough time for Carter.
Yeah, take a number, Carter.
All right. The bear case. BK, you've been known to put on a bear suit
Every once in a while.
And zip it up the back.
Yeah.
So where are you now?
So, I think a pullback would be very welcome here and not unusual. The one thing that concerns me about this run that we've had, you haven't seen it confirmed by the high yield bond index or the corporate bond index. Those haven't broken out to new highs, which tells me perhaps the sentiment among investors isn't as enthusiastic as we want. That being said, I have been pretty much 50-50. We could either break lower or break higher here. And since we've broken higher, I think you have to play the odds that we're going to have this blow-off top. That blow-off top can last 6 months. It can last 9 months. But so on a pullback, let's call it 5 or 6, 7%, I'd actually be looking for a place to buy.
Well, if you look at 2019, those pullbacks that Carter detailed and the one that Joe is calling for have been great buying opportunities. Now, there's kind of different characteristics of each one. There's been a lot of rotation, right? So it hasn't been buy the same sectors to get back to the new highs. It has been stay in the mega cap tech. I'll just say this. If you're looking for a blow off top, the last time we had one of those was January 2018. I think from the tax cut in December of 17, we had this thing that just went parabolic. And what happened is we had a very sharp decline after, and it took 10 months to get back to the new highs. So the only thing that I would worry about now between now and the end of the year is the higher we go without a pullback is the harder that we could fall in the first quarter of 2020. And that's just, it's just like what goes up must come down.
The IWM, the Russell, we talked about it over the summer. 145 had a hold. It did hold. Now it's had a nice rally. But 160, you go back, it's had trouble at 160 a couple times. April was sort of the big high. Carter mentioned that the all-time high, I think, was August of last year, 173. I'm hard-pressed to believe in this environment we go there, but 160 now becomes huge resistance the same way 145 became support. If we fail there, which I think we will, I think the S&P will follow as it has for the last couple of years.
How are you feeling about the markets after hearing this bear case laid out?
I don't, I'm always long, so I have to be always long. I was far more nervous a couple of weeks ago. I think that earnings turned out to be better. So I know the market's a little bit higher. I always think time to buy protection.